right. Good morning, you magnificent melon head. Spilled coffee on myself. That's good. Happy election day, everybody. Let's just hold our noses and get through it, shall we? Shall we? Yeah, today is the day. Markets are kind of flat right now, not really reacting all that strongly one way or the other, and I would expect that, right? It's the market likes certainty. Right now, we have anything but certainty, so not a whole lot going on. Anyways, I'm gonna bring my man Mish in right away. We're gonna get through a little bit of messaging here early, and then we are gonna move right TF on. Mish, how we doing today, brother?
Man, I'm doing great. Just hanging out in the great Lincoln, Nebraska.
Hanging out in Lincoln. All right. Well, I am hanging out here in Southeast PA, and all is right in the world for now. Look, folks, we're going to get through this one early because this is a finance channel. We do markets, we do investing, macroeconomics here. We do not do politics, although every now and then we wade into those waters. You can't help it when you're in finance. Got to send a shout out to, of all people, Mario Lopez put this one out today. And this is my PSI. Yeah, AC Slater. He says, before you vote, go grocery shopping, gas up your car, pay your bills, look at your 401k, and then vote. And you know what? That's everything that affects you. That's your food, that's your fuel, that's your future. And then go vote. And you know what? I'm going to leave it at that. All right? I get it. Tempers are flaring, passions are high right now. Let's not pollute the channel with a bunch of partisan crap this morning. I'm just going to, on behalf of the mods, on behalf of all of my blue wrenches, who are wonderful individuals who do a lot of good for the channel, please, let's not bombard them with all that garbage. Let's just move on, and let's get into the markets. FFS. Thank you for this message, Mario Lopez, by the way. Get some, AC Slater. All right, let's see what's going on this morning. Not a whole lot. S&P 500 is up 14 points or 0.38% at the moment. The Dow looks like it's up about 112 or 0.34%. You know, I remember a time when a 100-point move in the Dow was a big deal. It was a long time ago. Now it's a rounding error.
Points was a big deal on the bond movement?
Yeah. Nope, not anymore, man. Volatility is the name of the game. Anyway, let's see what the NASDAQ doing. Up 75 or 0.68% right now. So stocks not really making a lot of moves right now. The U.S. dollar, the DXY index, this is the dollar measured against the strength of other currencies, currently up 24 basis points or 0.21%. Now, right now it's at 110.36. While we're on the dollar, let's take a look at this. I have this chart up here right now. This is going back about a year, and I know there's a lot of lines on here. This is messy. Yahoo Finance doesn't let me trim the lines. So we've been in this upward channel really since January, where, you know, here we've got a pretty strong level of resistance and we've got a pretty strong floor of support as we move up. Now, since really about the middle of September, we've been in this bear flag pattern here where we've been having lower lows and lower highs, but still within this channel. And we're kind of right now, if we zoom in on this chart, you can see here we're kind of at a point where we're approaching double resistance here between 109, looks like 109.7 and 109.2. You've got the resistance of this longer year-long channel and the resistance level, the support level of this bear flag. So this is probably a place where I would expect the dollar to bounce. All right, we've had this trend of stronger dollar all year. Now, the dollar bouncing, the dollar is the denominator in the equation, so a stronger dollar is generally bearish for the price of assets, and that would be pretty much all assets. I mean, the dollar has driven assets lower this year. Higher dollar means lower stocks, means lower commodities, means lower Bitcoin, means lower real estate. I mean, it really drives everything lower right now. So Mish and I were talking before this stream. You know, there's ways you could trade the DXY, you could trade the dollar index, right? There's that UUP ETF that's out there. Not a financial advisor, not financial advice. All that CYMA stuff, do your own research and your own DD. I've got some bearish bets on the index already. I've got some NASDAQ puts in play that have been there for a while. So I kind of already have a trade in place that's based on a stronger dollar. So I'm probably not going to trade this one, but it's just something to think about. I'd not be surprised to see a bounce in the dollar over the next few days, or even today for that matter. Um, so that's something to keep an eye on. Also, I'm not sure how the election would result here. Um, let's just talk real quick about market reactions to the election. I really only see one possible scenario where the market makes any kind of a move with conviction here. Gridlock in
Before we get,
Congress. Go ahead,
there's
Mish.
two outcomes, right? You can either have the Republican sweep, some sort of split, or a Democratic sweep.
Yeah. And right now, I think the market is pretty much pricing in the split, right? Gridlock, and the first two, if the Republicans sweep or if there is a split, you're looking at congressional gridlock. You're looking at nothing getting done in Congress, all right? Whether the Republicans take both houses or take one house, the net result is the same. You've still got a split. You know, the Republicans would get subpoena power on certain committees and things like that if they took the Senate. That has to do with the connotations and the circus playing out in the news headlines. But as far as markets go, really those two have the same result. Now, in the event of a Democrat sweep, which I'm not taking off the table, it's certainly possible. I think the markets don't have that priced in. And a Democrat sweep would probably result in a lot more fiscal stimulus. And the difference between fiscal and monetary, when you hear those two terms, monetary refers to the Federal Reserve. That refers to interest rates, to quantitative tightening, quantitative easing, right? That's monetary policy. Fiscal policy is taxing and spending and borrowing. All right. And I think if we get a Democratic sweep, we're probably looking at more fiscal spending. Again, please don't pollute the comments with political nonsense. This is just a practical, pragmatic view at it, right? So I would actually not be surprised to see a big rally in the indexes if the Democrats were to sweep, because that would mean a lot more fiscal stimulus. And that would mean a lower dollar, a weaker dollar, and I think that would send asset prices higher. It wouldn't necessarily mean a healthier economy. And that would be a short-term adrenaline shot for asset prices, but I think it would ultimately lead to expedited declines in liquidity in the bond market, because if we do have runaway fiscal spending, that money has to be borrowed from a bond market where there's no buyers. So it would further drain liquidity from the bond market, and it would bring about a banking crisis sooner.
I think we'd actually get a true melt up in the sense of a straight spike up for a day or two and then a freedom fall down.
Now, the missing ingredient to an actual melt up, right? A melt up with any kind of legs, that needs a dovish Fed. I don't think that can sustain without a dovish Fed. You could get these bear market rallies. You could get money moving from one place to another. But ultimately, without an expanding money supply, I don't see asset prices moving significantly higher. So that's a little bit of my take. Now, the only other thing, I don't know if I want to go here. If we wake up tomorrow morning and we don't have an answer, markets won't like that. All right, markets like certainty. If whether we're going to go one way or another way, the markets just want to know which way, and then they can price it in. Markets don't like uncertainty. And if we wake up tomorrow and we don't have an answer, which is a very likely scenario, that won't be good. All right. And that's about all I got to say about that. All right. So we talked about that. Let's see what the bond market is doing right now. It looks like yields are heading lower. And remember, folks, yields heading lower, that means prices are heading higher. So people are buying bonds right now. The 10-year yield is down 2 basis points, not a lot, at 4.19%. We're just off the highs. 4.33 was the high for the year in the U.S. 10-year yield. So we're really not that far from a high right now. Debt market is causing a lot of problems. We're going to talk about crypto, time permitting today. There's a lot going on in the crypto sphere right now. Mish and I did a video on it yesterday. Thank you so much, Mish, for helping me get through that video yesterday, because that was a tough one. And we got that out just in time, didn't we?
Barely, but yeah, we were on the front wave on that one.
Yep, because everybody by tomorrow, I think everybody will have heard of FTX. Let's put it that way. And really, I think all this comes back to the debt market. When borrowing costs are getting more expensive, it exposes the rot and it exposes the corruption and the infection going on elsewhere in the financial system. And crypto is rife with it. So we'll get to that one in a little bit also. Commodities this morning, looks like we got a mixed bag. I would expect a little bit more. Well, the dollar's kind of at its low. It's not moving that much today. The gold is right now down $2 or about 0.16%. Silver is up a penny, 0.07% at 20.93, struggling to retake that 21 level, but I would not mind seeing that. Copper is about flat for the day, up 3 cents.
Back on
Crude
silver, I
oil,
mean, that's a horrible place to be, right? Whether or not we're going to get back to 21.
yeah, yeah. I mean, if we were in the 18s a week ago, weren't we? And meanwhile, those inventory levels continue to get lower. So watch silver markets. Fireworks are ahead in the silver market and the gold market for that matter. Although I still think overall, medium term, I still think silver's going lower. I would love to be wrong about that. God knows, I'd love to be wrong about that, but I think silver's probably still going lower. Oil right now at 91.62. That's down about 17 cents. Let's take a look at the oil chart right now. This is going back to the start of the year. Big run up all through last fall, the big spike with the invasion that happened. Then we ran up to about May. Then they announced the dumping of the Strategic Petroleum Reserve. And of course, the price came all the way back down. We bottomed on September 28th, 3 days before I called the bottom. Actually, I'm sorry, the 26th, it looks like we hit the bottom. And we've been kind of riding this support level up ever since then. We got the big OPEC cut on October 5th. I think we're probably going to get another OPEC cut on on December 4th, which is the next OPEC Plus meeting. I wouldn't be surprised to see another production cut come out of that meeting. But for right now, we're almost done with the SPR dumping. They have authorized the last 15 million barrels will be dumped in December. So that's only a 500,000 barrels a day, where they've been doing almost 1 million barrels a day prior to this. No longer enough to keep those prices suppressed. Prices are starting to move ahead of that. We've been talking about this. We talked about this all summer, that energy price inflation was going to come back big time in the fall. It's already starting. It's probably going to get worse into the winter. So I'm still very bullish on oil prices. Full disclosure, I have some call options in XLE that I've been in since that day with the purple arrow. And those are leverage bets on oil stocks. That's XLE is an ETF that tracks the price of oil. It's in ExxonMobil, Chevron, as well as a basket of other oil companies. So that one generally rides oil prices higher or lower, but there's also a little bit of the indexes mixed in there. So it's possible that that one can go down even as oil prices are heading higher. That's something to keep in mind if you're looking at that one. Okay, what else?
Look, Uroy, real quick. Uranium royalty.
I'm sorry, I couldn't hear that, Mish. What was that?
Uranium royalty.
Uranium royalty. What's that? URA, I believe.
UROI.
UROI.
Or UROY.
Okay. UROI. Uranium Royalty Company. Where'd this one come from? I haven't seen this one before. Oh, look at that. Nice jump today. Let's look at a 1 month chart. Big gap up today on that. I would expect there's some kind of news, either earnings or a merger or something happened there. Up almost 18% yesterday. Let's see. What happened to that one? Quarterly update announces voting results. Okay, they filed their quarterly report. So obviously they had good results there. You know, I get asked about uranium a lot, Mish, and I just don't follow the uranium market that closely. And it's ironic because I used to be a nuke and I believe very strongly in nuclear power. It's just not a market that I've really followed. And I know uranium guys have done really well over the last few years, but it's just not one I'm that knowledgeable about.
I was in uranium, and I'd gotten out, of course, right before this happened. But the reason is I'm just not seeing it in the news right now. If we start getting a lot more news about going back to nuclear, I'll pick up UROI again. Full,
Here's
full,
the,
full. I used to have UROI.
here's the thing. Even if we were to announce this global effort to get back into nuclear right now, it takes so long to build a nuclear plant. It takes so long that I don't think we would see a movement in uranium prices right away. It would be a long time. I mean, these reactors we've been building down in Georgia and South Carolina here in the States, we've been working on them for more than 10 years right now. They're still not running. So we made those decisions back in like 2008, 2009, and they have not split one single uranium atom yet. So, that's like 14 years later and they're still not affecting the uranium market. So I don't I don't want to poo-poo the idea because I know people have done very well. I just don't see the urgency in this. I don't see it moving anytime soon. The nuclear industry moves at a snail's pace, folks. That is the slowest moving thing in the world. Continental drift will runs laps around nuclear energy. It's just the way it is. I've spent a lot of time in that industry. Nothing happens fast there. I got to send a shout out to my man, Crushing Bear, the Melanimous patron of the arts. What's going on, Crushing Bear? He says, what happened to UK? So quiet recently, settled down. UK had a big drop in their bond market, and I think whether it was justified or not, let's bring up the UK 10-year. If you want to know what's going on in the UK and you only have a couple of seconds, take a look at the UK's 10-year yield. All right, and that is what really decides what's going on there. UK's 10-year yield right now is at 3.65%. It was at 4.5 when they broke things in their pension system. All right, let's go back. You got to go back 3 months now, right? Up here, it got over 4.5 on September 28th. Right here, this is where the pension system broke in the UK. And then, we had all that fiasco with Truss and the head of cabbage, and then Sunak came in. For whatever reason, after Sunak was announced, the yields in the UK bond market tanked. All right, that was people buying up the bonds, and we've been kind of trading down here ever since. If you want to know what's going to happen in the UK, besides the energy markets, which will be upon them very soon, keep an eye on this 10-year yield chart. If you see this break back over 4%, and God forbid, starting to approach 4.5 again, that's when you know problems are probably going to start flaring up again in the UK system. So that, I think, is what's happened over in the UK. And thank you, Crushing Bear, very much for the super chat, sir, and for the support of the channel, and for your support on Patreon. Thank you. Crushing Bear has been sending me a lot of charts and a lot of ideas on Patreon lately. I love the support I get in the Patreon group. Not just financial. I get a lot of great ideas from those guys, Crushing Bear among them. So thank you guys for everything you do. There is a link down below should you feel so inclined. And I think I am caught up in that department, and I am. All right, let's take a look. I got a couple of stories open here right now. Some couple of stories that, any one by itself this morning is probably not that big a deal. But when you view all of these stories in aggregate, it starts to paint a pretty messy picture right now. And really, that's a lot of what I do here. I consume vast amounts of news, and I try to connect the dots and look for trends. It's really, my eyes hurt by the end of the day, and I'm sure Mish is the same way. Which read a lot of articles and look for common denominators. This one was in Bloomberg this morning. The pace of tech job cuts is reaching early pandemic levels, that's a pretty astronomical pace of job cuts. I don't know if you guys recall that. This is really harking back to the Meta story. Meta has announced a big wave of layoffs. Things just not really going well over at the former Facebook. But tech firms are slashing spending as inflation hits budgets. Cuts in big tech follow disappointing earnings reports. Job cuts in the technology industry are accelerating, nearing levels seen in the early stages of COVID-19 pandemic as companies both large and small curtail ambitions and brace for tough times ahead. The list goes on who is making the cuts, but really they spend a lot of time talking about Meta here, right? Meta has been the leader in job cuts, but this is not limited just to Meta. Obviously, Twitter has been cutting jobs. I'm not sure that's economic reasons as much as that's Elon cleaning house over there, which has been utterly hilarious to watch, by the way. Moving on from that. So here's the first one. Go ahead, Mish.
There's a couple things going on here, the threads that we're looking at. We're looking at a massive layoff number this week. We've already gotten 12 from Meta. We have the 3,000 from Twitter. We have, a couple things here and there that are kind of pointing out to a really atrocious number. But they're pulling that number to be like negative 250. Like so many more that we actually counteract and go negative. And why that's going to happen, there's a lot of different theories, but we're really expecting a fairly atrocious employment number this week or next week.
I think this is probably a good time to mention the issue of the lagging indicator, right?
Mm-hmm.
A lot of people say that the Fed has gone too far already. Even though we haven't seen any reduction in inflation yet, the problem is when the Fed moves something, it doesn't reflect in the data right away. It takes a long time for that to affect things, right? Like If you're in the shallow end of a pool and you throw a bowling ball in the deep end, I don't know where I got this analogy from, but it's on the fly. It's going to take a while for that wave to get back to you, right? So you throw the bowling ball in the deep end and you're just sitting there saying, well, it hasn't affected the surface of the water. I better throw a few more bowling balls. And then the first wave hasn't hit you until you've thrown the 10th one. And then you realize, oh, I made a mess out of the surface of the water, and now there's waves all over the place, right? That's the Fed raising interest rates. It takes time for those rate hikes and that QT to start reflecting in the economy. And a lot of people are worried that the Fed has already hiked too much and that we're about to see the results of all of it all at once. It's going to hit us way too fast. Or maybe even like, when you're in the shower and you go to turn the water up a little hotter, but you turn it too far and you're like, oh boy, it's coming. You're about to get scalded. You're about to get burned, right? It takes time to get to you. So this could be this wave of layoffs in tech, and these other stories that I'm about to show you could be the lagging indicator of the Fed hikes. And that's why these people are so strongly advocating for a reduction of the pace or even a pause of the pace, not necessarily to reverse pace right away, but just to see what the results are actually going to be. And by the way, you want to talk about how I have just absolutely the best, how the melon heads are just the best viewers in all of YouTube. Check out M and J here saying, hi, Mom, hi, Dad. Hi, Mom, hi, Dad. I love you guys. M and J, that was awesome. I forgot again. There's a lot going on in my head before these morning live streams, and I did not say hi to Mom and Dad. Thank you very much, M and J, for the support of the channel and for making Mom's morning. I'm sure she is giggling, and Dad is probably laughing obnoxiously loud at that one right now. You guys are awesome. Thank you very much.
Breaking news. FTX stopped withdrawals.
FTX has halted withdrawals?
Yep. Get it
now,
from places.
I saw last night that they paused. They didn't halt withdrawals. They limited them to 25,000 last night. Have they actually halted them outright?
I've gotten a couple different tweets now that the on-chain data shows.
Wow. All right, so we interrupt this economic doom and gloom to bring you even more doomy news. I won't rehash the whole video that Mish and I did yesterday about FTX and Binance and what's going on over there. Just to say, when we did the video yesterday, we were talking about this FTT token, and I drew this purple line on the chart at $22. That was the line in the sand that FTT was trying to defend to prevent Alameda Research from going bankrupt and setting off this wave of dominoes in the crypto space. And Mish, we got that video out just in time, because if you zoom in here, let's look at what happened last night. Oh, this is ugly. There we go. This was, we released that video yesterday, around maybe 3 o'clock?
Yep, 3 o'clock exactly.
Yeah, so we released the video right around here, and a few hours later, bam, sold right off. So at risk of getting ahead of myself, folks, it looks like FTX is now officially done. All right, maybe not officially done. They are, for all intents and purposes, dead. Insolvent. It's just a matter of time. If you zoom out on this chart, you go to a 1-year chart on FTT, there is just no support below here. This thing is going down, and it's not stopping anytime soon. And these people owe billions of dollars with this FTT token as collateral, and if they try to sell it, they're going to make it worthless. People have seen this, and they're already getting out in front of it and making it worthless ahead of time. So this is the wave of crypto defaults that we saw in June. FTX is the company that stopped it, and they did it by borrowing against this token. Now this token is worthless, which means this wave of defaults is going to continue. All right? Get your coins off the exchanges, folks. Do not leave your coins on Coinbase, on FTX, on Binance, on any of them. All right? I said this all the time on this channel. People are going to wake up across the world, and they're going to try to get their Bitcoin or their whatever off of FTX, and they're not going to be able to get it. They're going to be locked out of their account because they don't actually own Bitcoin. They own an IOU from FTX that says I owe you a Bitcoin. And that's what happens when you leave your coins on the exchange. And FTX is probably done now, which poor Sam Bankman-Fried, he spent almost $40 million influencing the midterm elections, trying to buy himself legislators ahead of the regulation that is probably coming. Oh, he's never going to get to yank on those strings that he bought himself. That's too bad.
Hey,
When you have crypto guys trying to buy politicians, that's when you know something's really wrong. All right, let's put it that way. Crypto was started because we wanted to be away from that, not to bring that back in. What's going on, Mish?
Thank you, Corzo, for bringing that to my attention.
Who was it? Corzo brought it up?
Corzo.
All right. Thank you very much. And check this one out. This was Caroline Ellison, the CEO of Alameda Research, who tweeted this one on November 6th. This was 2 days ago that, oh, hey, Binance, while you're dumping all these FTX tokens, this FTT, we'll buy it all from you at $22. Caroline, why didn't you buy it all at $22 last night? If Alameda had all the money in the world to buy all this FTT at $22, how come they didn't buy it at 14? How come they didn't buy it at 15, 16, 17, 18, 19?
Can you zoom in on the live chart? It's moving.
I can go one day, and we got to get off of the candles here. Let's do a line chart here. Currently at 1558. Yeah, this not looking good. This is heading much, much lower. And look, $22. Here is where Caroline Ellison said, we'll buy all of it off you at $22. Why isn't Alameda Research buying it all right now? She put out this tweet. Why? Because this is what I theorized when I read this tweet. This was securities fraud. She was trying to jawbone a floor into the market. She was trying to convince retail traders to put in buy orders at $22, thinking she was going to backstop it, hoping enough retail traders would be dumb enough to pile into this worthless token to prevent her outfit from going bankrupt. If anybody outside of the crypto space were to do this, they'd be in jail for this tweet. This is securities fraud out in the open. Anyways, maybe I shouldn't. Let's just move on.
Yeah, let's move on.
Also, Solana is another token that this Alameda company owns a lot of. Almost 10% of all Solana in existence is held by this Alameda Research company. And, well, look at these tokens. Look at these candles right here. Let's set this to a 5-day chart. So what's going on here? It looks like either retail traders are out in front of this, and they're dumping their Solana, knowing that Alameda is about to dump their Solana, or this is Alameda dumping their Solana in order to use those funds to prop up the FTT token. Either way, Solana is going down with this ship. So I have to be careful my wording here because I'm not telling you guys what to do. All I can ever do is tell you what I do with my money. My money is not going anywhere near anything that these people have touched in the last few years. If Sam Bankman-Fried has been out there pumping it, if Alameda Research has owned a major chunk of it, I'm not going near any of it. All right? Especially all these altcoin projects and DeFi. You go back through some of my old videos, right? When I first started this channel, my God, the camera was terrible that I used to use. The video quality was just awful. But I always said I don't trust any of these DeFi apps. The yields they promise are too high. If you see a 15% yield, run. It's because they're ripping you off. And this is why. Seeing charts like this, knowing this was out there and that this could happen. That's why I always said I don't do DeFi. So, anyways. Yeah. Oh, look at this one. Huh. Ontario Teachers Pension Plan invested in FTX at $32 billion valuation. A $32 billion valuation. I don't know whether to laugh, whether to feel bad. You shouldn't laugh at people losing money, right? You shouldn't poke fun at that. It's bad optics and it's bad ethics. What in God's green earth were they thinking? A teacher's pension plan investing in something like FTX at a $32 billion valuation, right? They won't touch an Exxon Mobil that's trading at a 9x valuation that's yielding 7%. No, they won't go near that. Oh, but FTX, they've got a great ESG score. So let's invest our teachers' retirement in the FTX. Well, that's gone. That money is wiped out now. So the Ontario Teachers Pension Plan, I don't know how much they invested in that. If you're a teacher in that area, you're not broke. All right. Just know that your pension plan lost money because of this. Because whoever was responsible for being stewards of your nest egg decided Sam Bankman-Fried and the romper room over at Alameda was worthy of your retirement money. And so that's what they did. They put it in there. And, well, also, folks, just so you know, Bitcoin will not be immune to this. All right. Now, I'm long Bitcoin. I still buy Bitcoin regularly. Bitcoin is probably going to be dragged down by this. All right. And the next question is, who's going to go belly up after this? All right. Alameda's going down. FTX is going down. Well, who do they owe money to? And then whoever they owe money to, who do they owe money to? That's contagion. That's those dominoes falling. FTX was the one who stopped the dominoes back in June, and now those dominoes are going to start falling again. So keep an eye on that. All right. Bitcoin, I got this purple line drawn down here about 17,500. That's where it bottomed before. You had weak support back here from 2020. If we break below 17.5 on this news, which I really think we probably will, there's a long way down. I think Bitcoin, before this is all done, before this crypto winter is over, I think Bitcoin's probably heading back under 12,000, somewhere with an 11 handle. Good news, though, I think that will be a historic buying opportunity, much like the last time Bitcoin crashed after a halving cycle. The next halving is in, I believe, April or May of 2024, so we have a long way to go before this thing starts spiking again. All right. By the way, I got my man Jose is here in the house. Hold on, Jose. I'm coming.
Well, also, your natural gas just dropped 10%.
2%, probably on some inventory data or something. 10%. Oh, that's a big drop.
Double digits.
First, we got to say hi to Jose. Thank you, Jose, for the super chat, sir. Appreciate the support of the channel. He says, glad you never sponsored by FTX like other FinTubers. Well, I want to thank you. First of all, thank you for recognizing that. I was never specifically approached by FTX. All right, so I can't say I turned them away. I can tell you I have been approached by a lot of outfits, a lot of smaller outfits like FTX, like GarageBand crypto projects. I get offers from them all the time. I don't touch that stuff. All right, like I talk about mom and dad on this channel a lot. All right. If I'm going to take money from a sponsor and I'm going to talk about it on the air, I want to make sure I'm okay with mom putting her money in it. All right. If I wouldn't talk about it to mom, I'm not going to talk about it to you guys. All right. And I'm just going to leave it at that. I'll just tell you guys, I leave a lot more money on the table than I make with this operation. All right. So thank you, Jose. I appreciate you recognizing that. There is a lot of snake oil out there, and a lot of their business model is convincing influencers, social media people to go out and pump their product to drive the market for it. And then once that happens, the developers sell everything and get out of it. All right. And it looks like FTT is one of those things. Now, the FTX guys, they didn't sell it and rug pull. They borrowed against it and used it to buy up everything else. And now they're defaulting on that debt. So thank you, Jose. I appreciate the super chat, sir, and the support of the channel as always. You are a gentleman and a scholar, my good man, and I like the Buc-ee's corn nuggets. Mish, what were you going to say, brother? You were talking about natural gas.
Oh, yeah. Natural gas is up 10 or down 10%, but it looks like everything just kind of took a U-turn.
Let's see. Is it all dollar related? I don't see a big move in the dollar right now. Let's go through the indexes. We haven't been through the indexes for a while. Yeah, we did have just a big, well, the market is open. Let's just go through the actual indexes, not the futures.
Not the futures.
Why don't we do that? All right, here we go. The S&P is now up 2 points. Well, we had what was a nice big gap up at the open turned into a big gap down at the open. Currently up 2 points, flat for the day. The Dow is still up, 146.
And look at that volume.
Yeah, big sell-off at the open. That's interesting, although it didn't take us down too much. Markets, not NASDAQ down 6 points. Markets just don't know what they want to do today. That's what it comes down to. I don't think we're going to get a lot of movement. I could be wrong about this, but we're probably not going to get a lot of movement until we get some kind of decisiveness from the polls. All right, or God forbid, no decisiveness from the polls will probably not be good for markets. So probably what we're going to see for the next couple of hours. I don't have any trades on right now, or I don't have any new trades other than the ones I've talked about. The only thing I'm looking at, maybe I'll put in a bullish dollar bet right now. I don't know. I'd like to see it get a little closer to that support line, but
I'm
even that,
currently red
I don't
light.
really have any conviction of anything right now. So
Yeah, I'm currently red light on my trading.
not making any trades right now. Now miners have looked pretty good recently for the last couple of days.
That's the problem with miners when they fluctuate. You never want to get in at the top.
Yeah, there's definitely a strong FOMO element when it comes to that. I've got Steve Woitis is in the house. Thank you, Steve. Appreciate the super chat. He says gold and NEM is that Newmont Mining, I think, are trading near March 2020 lows. Thoughts? Well, March 2020 lows is probably a good bottom for the indexes as a whole. Like I wouldn't really think about going long the indexes until I see those March 2020 bottoms challenged. Now the miners, look, I think we've got, yeah, it was Newmont. I think we've got lower metals prices in the medium term, despite what's going on with the inventory counts over at the COMEX. I still think we've got in the medium term lower metals prices and higher energy prices, and that's very bad for miners. All right, now I own a few miners myself. None of them are doing very well, but I'm in a few miners. I'm not looking to add to them yet. All right, now with the asterisk here, if you are going to buy metal, if you're trying to call a bottom in metal, buying the metal while it's still in the ground is the cheapest metal you'll ever get. So owning a miner is a good leveraged play on a bull market in precious metals. I don't think we're into that bull market in precious metals yet. All right, I'm still holding off on that one. Like right now, Barrick is looking like a decent morning. It's up 1% all of a sudden. But look at this chart. Yikes! 1 year chart on Barrick Gold
Hey,
just
real quick,
doesn't look that good.
no one, please don't, chat, please don't advertise for specific candidates.
Yeah, thanks, guys. Let's not time and a place. We do finance here. We'll just briefly, very briefly touch on the political stuff when it suits us, but this is not a politics channel. There is no shortage of that stuff in the world. Certainly don't need more of it. So Steve, long story short, I own a couple of miners. I don't own those two specifically. I haven't done a full DD on either of those two, so I can't give you a yay or nay, but I can just, in the whole space, long term, I'm very optimistic on the miners. Short term, I'm very pessimistic on the miners. So I think the market's going to give us a better entry. All right. As always, do your own DD, your own research, and thank you, sir, very much for the support of the channel. I appreciate it very much. All right, real quick, I want to get back on these other economic indicators. We were talking about the layoffs. We were talking about the lagging indicator over at the Fed. There's a couple of other economic stories out today that I want to talk about. Also, well, we'll get to that one in a second. United States NFIB Business Optimism Index. That is the National, I believe, Federation of Independent Businesses, something like that. The NFIB Small Business Optimism Index in the U.S. fell to a 3-month low of 91.3 in October. Anything below 100 is very bad. This is compared to 92.1 in September, so it's still getting worse. 33% of business owners reported that inflation was the most important issue in operating their businesses. That's up 3 points from September. That tells you inflation is getting worse despite what they're telling us in the headlines. At the same time, the number of owners who plan to increase employment in the next 3 months fell to 20%. There's that lagging unemployment indicator from the Fed. And 50% of businesses said they raised average selling prices. So inflation is still a big, big problem. As we all know, anybody who buys anything knows inflation is still a big problem. Owners continue to show a dismal view about future sales growth and business conditions, but are still looking to hire new workers. It's interesting about still looking to hire new workers. Now, just so you know what this index is, the NFIB Small Business Optimism Index, it's a composite of 10 seasonally adjusted components. calculated based on the answers from 620 NFIB members. Questions include plans to increase employment, plans to make capital outlays, plans to increase inventories, expectations of the economy to improve, expected real sales higher, current inventory, yada, yada. Generally, business optimism index, right? It's an aggregate of many answers to many questions. And anything below 100 shows that small businesses are pessimistic about the economy. All right. Now, this one just came out. Shout out to Mish. He spotted this one right before we started here. The Red Book Index in the United States increased by 7.6% for the week ending November 5th. This is last week's data. Now, this is an increase in retail sales, but this is not adjusted for inflation. So if retail sales increased 7.6%, means retail sales are not keeping pace with inflation. This is a negative real growth in retail sales. Again, this is pessimistic for the economy as a whole. Now, I saw a couple of images. This one was a shout out to Jim Lewis over at Wall Street Silver, tweeted this one out this morning. This is the number of hours you have to work every month as taken by the average hourly wages and how many hours it would take to earn the average hourly rent. Now, you can see here this goes back to 2015, and while the number was trending up, at the start of the pandemic, we were at about 57 hours of work for the average person to afford the average house or the average rent every month. You had to work pretty much a week and an eighth or a week and a day. Well, now that number is up over 64 hours a week. More than 64 hours, not a week, 64 hours a month just to afford the average rent.
I mean, you could do it in a week.
You could. I put in longer weeks than that. This takes a lot of time to do this. You got to spend a lot of time reading. But look, this is despair. This is a visual representation of just misery. This is people having to work an extra 6-7 hours every month just to afford the same living conditions. That's almost an extra day of work just to keep your roof over the head every month. That's coming out of your quality of life, right? That's coming out of recreation time. That's coming out of money you might spend on a vacation, money you might spend giving your kids a better childhood, money you might spend enjoying yourself, anything. God forbid you have a little quality of life, right? Now contrast that with this chart. And Mish, I know you're going to like this because it resembles your Keynesian Phillips curve. All right, so this one, there's a lot going on in this chart here. All right. Pay attention to this dotted line. This is the mean, or this is your average, right? And on the x-axis, this is the interest rate of a mortgage. And then on the y-axis, this is the price of real estate. All right, so the general consensus is as the interest rate rises, as we move out further to the right on this chart, the price of the house comes down because there's higher interest payments in the mortgage. People can afford less houses at higher interest rates, right? And if you go back, this goes back to 1988, higher interest rates, lower home prices. And you can see, yeah, there have been some outliers, but for the most part, this dotted line is the trend. Now look here in 2021 where we were. So interest rates were down near zero and home prices were through the roof because homes were affordable. People could still make the payments on them. Look where we're at now. Look at this orange line, October of 2022. Home prices are still all the way up here, but we've moved way out on the scale in interest rates. And this is scary because to get back to the mean, to get back to the average right now, home prices would have to drop more than 50% to get back in line with the historical averages. And when you look at this chart of people working an extra day just to afford their rent, that makes sense. Real estate prices have to come down or people have to start making more money, one or the other. This economy cannot support these values in real estate. And I did a video with the Economic Ninja last night talking all about real estate, not necessarily this real estate, but there was some really powerful data points in that video. I got this one. It'll be coming out today around 4 o'clock. Somebody was asking me yesterday in the chat, like, hey, Jack, are you and Ninja still talking? Are you guys still cool? I was like, yeah, me and Ninja are still cool. Absolutely. I was like, okay, that's it. We got to bring Ninja on the channel. And it just so happened I had just read this story about the rent. And you're going to want to see this one. There's some really, really good data points in there. That comes out at 4 o'clock today. Shout out to Ninja if you're watching. So this tells me real estate prices need to crash. They need to crash hard. Or interest rates need to come back down, one or the other. This dot is so far out of place, something's got to move.
Okay, so on a chart like this real quick, that solid line is the best fit line. And then you see the dots as they kind of go out. You see less and less as they go out. So those are sigmas. That main set of dots right along the curve is 1 sigma. Then you have your 2 sigma dots and your 3 sigma dots. That outlier is outside the 100% range of what would be considered a sigma chart. So this is so far outside of statistical norms. It's kind of it's not only by itself, it's holy crap by itself.
The engineers start geeking out whenever the Greek letters come out. when we get into the Greek alphabet. But you're right. The further from this chart, the more skewed. The further from this best fit line that you get, the more skewed the market is one way or another. You can see we started 2021 skewed. Back in 2021, this data point up here, we were way off. Right? We were pretty far from this best fit line. Now, my God, look at this. We've never been this far from this line. The real estate market, and this includes 2008 and 2007, folks. I don't know which dot it is on here, but remember that the housing bubble is within the confines of this chart. That just goes, oh man, this is maybe we should just move on.
So we got a couple super chats, and then the markets U-turned again.
Okay, I see the one that just came in. Did I miss one?
Pull it up, and I'll tell you.
Okay. Oh, okay. We got Steve. Yeah.
Yep. Should be KD.
KDM. Hello, KDM. Says, thanks, Jack. Don't do 64 this week. Oh, I miss the days of 64. I'm not gonna lie. I do way more than 64. I mean, I get up, I make the coffee, give the girls a hug, start getting in front of charts, start going through what happened last night. Now that the dollar is a big thing and the Forex is a big thing, I got to look at what did central banks overseas do, go through the usuals, Bloomberg, Yahoo Finance, CNBC, right? Go through all those, go through FinTwit, go through YouTube, see what the other guys are talking about. Then phone usually rings around 9 or 10 o'clock. It's Mish. We start talking about what we found. We'll be on the phone for like an hour. Okay, here's kind of where I think the video is going for the day. Start filming. Or if it's a live stream morning, wake up and just try to slap myself, wake up because I'm not a morning person, get ready for my 9:15 live stream. These are long weeks. I tell you, since I went out on my own and started doing this full time, I work longer hours now than I've worked probably since I was a fisherman. All right. When I was a fisherman, that's a whole other story. When you're out on the boat, that was like 120-hour weeks. But
we have at least 3 live shows, maybe 4. I mean, I used to joke, unless you're working 80, it's a part-time job. So do you want to touch on the we have another super chat, Jose, but the Powerball.
That's right. Well, first, let me just say thank you, Katie, again, very much. Thank you for the concern. Don't worry. I love doing this. So I do put in longer weeks than that, but it doesn't feel like work. I do this anyway. This is awesome. So thank you very much for the support and also interacting with you guys. Let me just say, when I started this YouTube channel, I thought it was just going to be me shouting into a camera. I never realized how much was going to come back. And that has been a very unexpected surprise, a very pleasant surprise of doing this. So thank you very much to all you guys for that. And by come back, I mean your ideas, your input, the friends that I've met, the trips I've taken, the people I've met, Mish, meeting you, Ninja, Chris, all these guys, Joe Brown, awesome guys. So really enjoyed just having an absolute blast doing this. The Powerball, Mish, talk about that for a minute. I don't have a link up, but we were talking about that before we started here.
So last night, everyone tuned in at 11 Eastern. It's a $1.9 billion drawing. I had some tickets because $2 for $2 billion. I'll do that bet. So understanding it's only 40% of the actual number got it. Don't kill me on the number. at 11 o'clock, this lady standing there with a microphone that says, "We're sorry, but not all areas basically got their stuff in on time because there was a security issue." So there's a state that didn't turn in any of its tickets because they had a security violation.
Wow.
That's all we've heard so
Can
far.
you imagine the fiasco in court if something were to happen where the winner was in one of those states, or there was, God forbid, there's several winners in the same state?
So
Oh, that would.
I guarantee it's a hack. You think it's someone just said California. If that state got hacked, oh my god, dude, they'd have to turn in every one of those tickets. None of those tickets would be valid. They can't have
Understand what we're talking about. Like, if there was something like this were to happen, you would have state attorneys general involved in this, because this is a one man budget windfall for a state. Whatever state has the winner, like there's people who are like running for governor right now. It's election day. They're like, ooh, if there's a Powerball winner in my state, I get to brag about the pension being fully funded and for the next 3 years. And oh, I fixed the roads and I hired all these other people, because he's looking at hundreds of millions of dollars in windfall taxes for his state. So,
how
I
many
mean, I could
lawsuits
see,
for I would have won.
yeah, I could see the Attorney General of California fighting with the Attorney General of Wyoming over, no, my guy won, my guy won. Oh, what a fiasco! The movie, I'm already like imagining sitting down in the theater watching the movie. Like,
They have to cancel the drawing at this point, refund all tickets, and do again on Wednesday.
wow, what a mess!
The integrity is blown for this drawing.
What a mess! What do they call it? A tax in disguise, or a fool's tax? The Powerball.
Yeah, and that's why I was kind of saying, it's for me, it's got to get kind of a certain level. Yeah, we're in stream, ECC. This is it has to get to a certain level before I'll play, because it needs to be worth it in my head for blowing $2. It's economics advice.
Yeah, that's well said. All right, and I got my man is Jose back again. Hello, Jose. He says he's in Austin. All right. I watch Open Door properties drop every week. Now, Open Door, that's kind of like a WeWork kind of thing, right? Oh, I know it's a real estate tech firm. I'm not familiar with exactly what Open Door does, but I know it's real estate related. Um, yeah, I'm seeing that also. I'm talking to a lot of guys who travel a lot. We're seeing Airbnb rates are coming down. We're seeing houses are staying on the market longer. We're seeing home prices, listing prices are going down 20% off, 30% off. Zillow is hurting. Keep an eye on BlackRock. At some point, the story is going to break about just how much money all these institutions that have been buying real estate for the last year and a half, 2 years. Remember all the people who took our retirement, our pension, our 401k money, and they went into the real estate market and they bid up home prices? And that was our money that they used to do that. They're going to take a big loss on that, folks. That's going to come out of us, right? Larry Fink is going to go in there and talk about market disruptions and this and that and ESG. Sorry, I lost all your money. That was our money, and it's going to go up in smoke. And I still got the chart up on the screen, that big orange dot. It's a long way down. So, Jose, thank you for that data point. Appreciate that, sir. Appreciate the support of the channel. And yes, EC660, thank you, sir, very much. Yes, this is a live stream. The easy way to tell is underneath the screen. When you click on it, it'll say live now or streaming live. And I have also, when I'm actually live, in the upper end of the corner, I'll put that little green arrow, or the green flag just above me here that says live. I almost always put that up there. Sometimes I forget. There's a lot goes through my mind right before a live stream. But yes, this one is live. Thank you very much, EC660. Sometimes it's hard to tell the difference between a live stream or a video premiere. But yes, we are live right now. And thank you for everything you do for the channel, sir. I appreciate that very much. And okay, moving on here, because there's more to this economic story. This one. Auto loan delinquencies rise as loan accommodation programs end. Now, we've talked about this issue a couple of times. Lucky Lopez did his video that got a lot of airtime about the rise of repos and how car markets were about to be flooded with supply, and that the repo companies and the auctions, they were letting this inventory trickle out because they didn't want to crash the price. Well, it seems this is now starting to reflect in the market, because even though these auto loan delinquencies are rising and these cars are getting repoed, well, combine that with This chart, this is the Manheim Used Vehicle Value Index. This is basically the price of a used car. Now, this is going all the way back to 1995. I've shown this chart in a lot of my CPI videos. Look at what the price of a used car has done over the last 6 or 7 months. It's fallen really fast. It's falling now as fast as it rose last year. So all these cars that are getting repoed right now, right? All these loans that are going bad, the banks are repoing that car. Well, they bought the car up here. And keep in mind, when you drive a car off the lot, the second you drive it off the lot, it drops in value big time. And now we're back down here. So when they auction these cars off, they repo the car because the loan defaulted, and then they auction it off. The bank is only going to recover a small fraction of that loan. Banks are going to take a big hit on this. This is going to add to the stress in the debt market. This is going to add to the stress in the credit. And this is also going to drive up the cost to borrow to buy a used vehicle. All right, so, whenever you see a chart go vertical like this, just know there's no telling how high it could go, first of all, but it almost always comes right back down. Almost always comes right back down when a chart goes vertical. But if you combine the rising number of delinquencies in these loans with the plummeting resale value of the car, that equals big losses for the banks in auto loans. So look at all these stories in aggregate. The pace of job cuts in big tech. The small business optimism index is down. The Red Book index is not keeping pace with inflation. The number of hours you have to work to afford the average rent. How skewed the real estate market is versus historical averages. The rising number of auto loans. The declining value of repossessed cars. All right? Again, any one of these by itself doesn't make a trend. But these are all stories and all data points that came out within the last 36 hours or so. You connect these dots all together, all right? This economy is in very, very bad shape. And I know I don't really do optimism, right? I get it, folks. I get it. Here it is written on the sleeve. Perma Bear. It's in invisible ink. You can't see it, but it's there. I wear it proudly, all right? I don't really do optimism. 15 years in nuclear power, all right? Mish, back me up on this. We are not trained to be optimistic. For 15 years, I had to wear a little card around my neck attached to my ID badge that said, what's the worst thing that could happen? I am trained to sniff out bad stuff to prevent it from causing catastrophe. And so that translates very well into this. I can spot a problem before it breaks. And these are all problems about to break.
Think about this. We had to learn, if I turn this valve, what happens 100 feet away to a machine that's running.
Yep.
And we have to know that for like hundreds of valves.
And I mean, in commercial, it's like, hey, what happens if when I'm reaching for the handle on that valve, if my elbow bumps the valve next to it, what would happen then? Like, I mean, the nukes are so pessimistic by nature. They're so it's beaten into our heads. Be glad it is. It's why nuclear power has such a good safety record.
Super chat and precious metals popping, dude.
All right. Let's get to my man RN stands for redneck. He says my puts aren't putting out. I generally refer to it as puts printing, not putting out. Thanks for the laugh. I appreciate that, RN. My puts are still in the black. They're still making money, although they have not made money for me in the last few days. I am patient. There is a growing chorus on FinTwit of people who are calling for market melt up. All right. These are people I respect. I respect their opinions. I haven't really seen the data that convinces me they're right. All right. I'll stop short of saying they're wrong, but my money is still on the side of markets go lower from here. All right. And I have the NASDAQ chart up here. The NASDAQ is where I have my puts against QQQ. I don't see a lot of support below this level. So if we go a little bit lower, I really don't see a lot of support happening. And look at all those stories that I just ran across there. I mean, there just are not good things on the horizon for this economy. So I'm still confident in my puts. My puts are out until January. I have a little bit of time to ride out a short bear market rally, but I think that little bear market rally is over, and I think we're still heading lower. We've got a CPI read on Thursday, which will be live streaming. So, come come around here. We're starting at 8:15 a.m. Eastern time for that. We'll see what the market does. I wouldn't worry too much about those in the short term. But thank you very much for the chuckle. My puts are not putting out at the moment either. I wonder if I just got myself flagged. Jose is back. He says, I cringe at mountains of debt that non-melon heads hold. You know what? I cringe at it too, but at the same time, it makes my mouth water, Jose, because there are ways to trade it. I mean, when there are mountains of debt, when there is rot in the system, it usually means something is out of whack. And when there's imbalance in markets, there's typically a reversion to the mean is coming, and you can position yourself accordingly to benefit from that reversion to the mean. So, see it for the opportunity that it is. And, like I was talking to Ninja yesterday before we started recording, and man, the optimism from that guy is contagious. Like it spews out of him. Like I couldn't do it. I couldn't do what Ninja does. If I tried, I would come across as disingenuous because I am just very pessimistic by nature. But Ninja has the same pessimism, but he sees opportunity like in all of it. And he's so happy about it and so eager to share it. So, I mean, I don't know how to, I can't really do that. Like, that's just not my style. That's not my person. It's probably why he's got 300,000 followers and I don't. But, look for the opportunity in that. And that's the silver lining. That's how you turn it into a positive. That's all I can say. There is positivity buried within all my doom and gloom. Maybe I don't do the best job of communicating that because I'm just like, look how messed up this stuff is. But there is a certain degree of optimism built into it. You just got to peel a few layers back to get to it. All right, Mish, you mentioned something. Thank you, Jose, again for the support of the channel, sir. Mish, you mentioned metals was doing pretty good. Let's take a look. Gold is up 1.44% right now, and silver took that 21 handle and then some. All right, my favorite shiny. Look at that, 21.48 at the moment. Let's shrink this chart a little bit. Yeah, nice big. Here, I don't have my candles open. Let's put a candle on there. We got a nice big candle up in silver right around 10 o'clock. What happened? If I had to guess, I'm going to say it's Dixie related. Did we get a big drop down in the Dixie about the same time? Right at 10 o'clock? Is that 10? Oh,
I like to call those big fatties.
Yep, there we go. Big step down in the Dixie right at the same time. So it's the dollar trade, folks. The dollar's heading lower right now, and so the metals are heading higher. And I would expect to see that in the stocks too. Stocks are heading higher now. S&P up 17, 18 points. Dow now up 246 or 0.75%. And the NASDAQ up 1/3% or 37 points. So still a dollar trade. King dollar rules them all. Dollar go down, assets go up. Dollar go up, assets go down. That's why I said if you only have time to look at one chart in the morning before you got to go, you got to get your coffee, get in the car, and get out the door, check out the DXY chart. That's the one that's going to tell you what markets are doing today. All right, guys. I think we are all caught up. I appreciate all the support. I think we're probably going to call it there. Please remember, folks, renew your license to bitch today. That is very important. I know, it doesn't exactly bring out the best in all of us this time of day. Whatever happens, tomorrow the sun's going to rise in the east, set in the west. All right, it's going to keep doing it. Just hold your nose and get through it, folks. But you know what? Show up and check a box. All right, show up and check a box. Renew your license to bitch, because then you can say, well, at least I didn't vote for the guy, or I didn't vote for the bums, or you can say I did vote for the bums. I voted for the other bums, and I get it. They all suck, but renew your license to bitch. That's all I could say. And I got to guess Jose is in there. He says, you think we'll see ASE premiums fall anytime soon? No, probably not. Probably not, Jose. I see physical tightness in the market getting worse, so I think premiums probably heading higher, or at least staying high for the foreseeable future. So I personally, I don't buy American Silver Eagles. The premiums are just too high. I like the generic stuff. Thanks again, Jose. Appreciate that. Oh, as Al Pacino would say, just when I think I'm out, they pull me back in. Pepper Intelligence has been following the interest in Brics expansion. Was it Algeria, I think, just applied to join Brics yesterday? What sort of impact do you see in the next few years should the heavy hitters jump in? Well, right now the BRICS countries represents like a third of the world's population, so I don't know how much heavier you can really get without including the U.S. and Europe. The question is, the big question on BRICS is, do they settle on a BRICS currency? If BRICS agrees to a BRICS currency, watch out, dollar. All right, I think that's a long way off, because never underestimate just how predictably treacherous the Russians and the Chinese could be to each other. All right, that's newsflash: tyrants are a-holes. So to see all those types of personalities get together and agree on a certain currency, it's unlikely in the short term. But if they do agree on a singular BRICS currency and start agreeing to trade within the BRICS alliance in that currency, that's a serious threat to the dollar. We'll see if that happens. It's been hard enough to hold the euro together. We'll see if a BRICS can hold together. All right. Easier said than done.
Right. You got to get several people with alpha personalities to agree on something. It either is going to be a basket or new currency. I can't see all of them agreeing. Yeah, sure, we'll do what we did with the United States and give you control of the financial markets. No, I think it's going to be a basket if it happens.
Probably some kind of a weighted average of commodities. Kind of like the DXY is an amalgamation of the euro, the yen, all these other currencies. Maybe you could see some kind of commodity index come together to form this brick. Maybe the brick. That's the currency. But that's easier said than done. Now, the one thing that could bring them together to do it is a mutual dislike of the United States. So, let's not call it impossible. All right, spite is a good motivator. So, but I don't. Probably not a this week or even this year kind of thing. I think this is going to be more of a long, drawn out scenario. But definitely keep an eye on it, Prepper Intelligence. Absolutely, it's going to be a big story if and when that does break. So thank you very much for the super chat, the support of the channels. And all right, Mish, I am going to give you a word, brother. Give you the last word.
Hey, so yeah, everyone be safe out there. Make sure you vote. Like you said, it's a license to complain. You can't really complain if you didn't participate. And if your guy doesn't win, there's such a thing as a gracious loser.
Such a thing as a gracious loser. Wow. I think we could all stand to rewind and play that a couple of times. If your guy doesn't win, that's okay. Wow. What a concept. And yet it's almost like it was spoken in another language, Mish. Almost like it was another. What? Gracious loser does not compete. What? All right, guys. Have an awesome day. Hold your nose, vote, and until next time, live small and dream big.